Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar. Bert Salazar.
Hey, good day, everyone. Welcome to another Your Tax-Free Life podcast. As always, I'm excited to be here with each and every one of you. And again, thank you so much for your support. Last week, we had another week in which we had at least 1,100 downloads. So that's awesome. That means that we're doing a good job. That means that we're providing lots of information and great education to a lot of you that are eager to listen to our podcast every single week. Obviously, this is episode number 85. So I'm excited because we've been doing this for quite some time now, and every single time out we get to do it better. We get to provide more and more information. We get to hear more from all of you because many of you are sending me emails on a weekly basis. Sometimes I get anywhere between 35 and 45 emails in which you're asking me to talk about different topics. So again, if I haven't talked about, one of the topics you have an interest in, don't worry about it. Just hang in there because I'm going to get to it. And I have a long list of topics that we're going to be addressing between now and the end of the year, and then obviously for many, many years to come. Now, today I'm going to do something a little different because today I want to start giving you ideas as to what the capabilities are. What are you capable of doing? What are we capable of doing on your behalf if you choose our firm to kind of assist you with your retirement distribution planning and or your retirement preparation planning? So today's episode, which is again number 85, in our arsenal is called 25% to 45% tax reductions in retirement. And by the way, that's a very interesting topic because if we have the ability to help each and every one of you reduce your taxes in retirement anywhere between 25% to 45%, you're going to have a much more comfortable retirement life. You're going to be able to live above and beyond your means in many different ways. And you're going to be up on the top 1% of the food chain because a vast majority of Americans have no clue how to do tax planning, how to reduce their tax liability. And if they don't understand how to mitigate those tax liabilities in the future, then obviously they're going to be forced to invade more and more of their assets in order to offset those tax liabilities as they move forward into their retirement years. So one of the first things that we need to address is, number one, is it possible? Is it possible to be able to reduce your taxes in retirement without reducing your standard of living between 25 and 45%? And the answer is indeed, it can be done. So it is possible. Now, obviously, in order to be able to reduce your taxes between 25 and 45%, there are a number of things that you must be able to do. There's a number of commitments that you're going to have to make. But the first one is timing. Timing is very, very critical when it comes to tax preparation, tax reduction, and retirement, and creating a proper and apropos retirement distribution plan. On the average, most of the clients that we engage, on the averages, we're able to save our clients in retirement approximately 38% on an annual basis. No, this is not just once in a lifetime. This is every single year. So can you imagine if you have a $20,000 tax liability every single year, and you can reduce that tax liability by an average of 38%? How much better your life would be? How much more capabilities are you going to have with your money? how much better you're going to be in your family as far as making certain that your money is going to last a lot longer because of the fact that your tax reduction or the tax planning that you have worked for will allow you to use less money while still maintaining your proper standard of living without having to jeopardize comfort or excitement from a business and retirement perspective. Now, for those clients that have anywhere between 7 to 10 years prior to retirement, obviously the numbers can be much higher. So the reason why I pay so much attention to timing is the fact that if you have time on your side of the ledger, then there are more planning alternatives that can be accomplished and that can be put in play and that can be forecasted in order to reduce your tax liability sometimes by 100%. Now, obviously, the vast majority of the clients that we deal with are clients that do fairly well financially, so it's very, very difficult to get them to reduce their tax liability to zero. But for many of them, we've been able to do north of 60-65%. And that's, again, due to the tax planning approach that we take with each and every one of you and each and every one of our clients whenever they engage us on an annual basis. Number two is how important is it to reduce taxes in retirement? Well, it is extremely important. And obviously you have heard me talk about this many a times. Take a look at the historical tax rates in the U.S. We're actually living in the third lowest historical tax rate in the history of our country since the very beginning of the tax code back in 1913. For those of you that may not know this, when the IRS code came into play in 1913, it was going to be a temporary tax, never to exceed 7.5%. Once the government taketh, the government never giveth away, as I used to say in the Old English. So once a government does something, it's very difficult for them to give it back to you, because once they start taking money from each and every one of us, they're going to repatriate that money to other areas of the government, whether they need to or not. So they're not going to give it back to you. So it is, in fact, extremely important to maximize your taxes and your tax reduction in retirement. Also, we're actually moving into the 2020 presidential election. What is it that you're hearing? At least on the Democratic side, and by the way, I don't take political sides. Obviously I'm a tax planner, so I'm always looking at things from the tax code. But if you start to pay attention to the vast majority of Democrats that are running for president in 2020, they all want to do one thing. And the common denominator is to be able to increase taxes so they can spend our money on many other things. Now, for some of you, that may be a good thing. For others, it may not be. But at the end of the day, my goal is to try to give you the best possible retirement income with the minimum amount of tax liabilities. And if I'm able to do that, then I have done my job for you as a retirement strategist and also as a tax planner. So what do you think the future tax rates are going to be? Well, I can tell you one thing. January 1 of 2026, for the first time in U.S. history, you will know that your taxes are going to be higher. And the reason for that is that the Tax Cuts and Jobs Act that was signed into law by President Trump in December of 2017 that took effect January 1 of 2018. So we're actually in the second year of those tax cuts. They're going to be sunsetting December 31st, 2025, unless Congress does something with it. But we all know that Congress cannot even fight themselves out of a paper bag. They can't seem to be able to do anything nowadays, especially with all the partisanship that is taking place in politics in 2019, and I would more than likely venture to say for many, many years in the future. Also, be cognizant of the national debt is north of 22 trillion. Be cognizant of the unfunded liabilities, which are now north of 124 trillion and counting. Take a look at the viability of our current Social Security programs. If you're a baby boomer, there are 10,000 of us every single year entering, or actually 10,000 of us every single day entering retirement, and we're going to be able to do that, and they're going to be able to do that for the next 15 years. So that means that close to 78 million Americans are going to be entering retirement more or less at the same time from an economic paradigm and an economic perspective. So how are the social programs working for us today? What's the viability of Social Security? How about Medicare? How about Medicaid, which is a federal and state program? How about Medicare Part D? How about health care? What are some of the things that are going to have to happen in the future in order to get the vast majority of Americans and baby boomers to have health care? Is there going to be an increase in taxes? Is there going to be a Medicare for all? And if there is a Medicare for all, what kind of a negative impact is that going to have for all of us that have worked all of our lives, putting money away and paying our taxes towards Social Security and Medicare in order to, once we reach the age of 65, that we could have a fairly good health system in place. But if we now start doing Medicare for all, including the young people in America today, how is that going to deplete the quality of service, and how is that going to increase the cost of servicing Medicare for Americans in the future? So again, unless you're living under a rock, you have to start paying attention to these things, because at the end of the day, all of these issues are going to have a negative impact on the taxation of your retirement benefits. Also, obviously, one of the things that I'm doing now is I'm writing a book, and one of the chapters in my book is called The Loss of Unintended Consequences. In other words, you can't go fishing for Moby Dick on a dinghy. And one of the things that I find many a times when I do audit for new clients that are coming in to see me is that they have been going out fishing for Moby Dick on a dinghy because really they haven't had any type of financial advice or at least tax planning advice and retirement distribution planning advice from suitable advisors in the marketplace. See, the majority of advisors in the marketplace that are working with many of you, I would argue with all of you out there today, are primarily thinking about accumulation of assets. Very few of them, and there's some, but very few of them are actually talking to you and preparing you for the distribution of assets, which is paramount if you want to have a successful retirement plan. Number 3 is what does it take? So number 1 was, is it possible? And we know it is. Number 2, how important it is to reduce taxes in retirement, and I just walked you through that exercise. Number 3 is, well, what does it take? What does it take, Bert, in order to be able to reduce my tax liabilities, your tax liabilities in retirement? Well, number 1, you need to have tax planning commitment. And when I mean tax planning commitment, I mean tax planning commitment. And it's like, there's a difference between being committed and being involved. And I try to have this conversation with my clients at least on a quarterly basis, because it is important. We Americans have a tendency to kind of put important things on the side and not pay attention to them, and we have a tendency to forget anything that we've learned in the past. And obviously being committed versus being involved is very important, because I like to make an analogy that is a funny one, but it makes a lot of sense. For those of us and those of you that have ever had bacon and eggs for breakfast, you see, in a bacon and eggs breakfast, the chicken was involved, yet the pig was definitely committed. So if you want to accomplish a successful retirement life, you have to be the pig. You have to be fully committed. You have to understand how tax planning works, and not necessarily that you have to become a tax preparer or a tax planner or a CPA, but you need to be able to have the ability to think outside of the box. or you need to have the ability to look at your financial decisions through a telescope as opposed to a microscope. And if you do so, then you'll start to get a clear understanding of your personal finances. You see, at the end of the day, you can't learn how to swim by reading a book. So, for those of us that were kids and that learned how to swim, and I swam in college, not in college, but in high school. I played baseball in college. But when I was part of the swimming team in high school, I learned how to swim when I was like 5 years old. But I didn't learn how to swim by reading a book. I learned how to swim by getting in the water and swallowing water, and that's the only way you're going to be able to do it. So the same thing is going to happen to you and your family from a retirement standpoint. Another point in what it takes to be successful and to be able to reduce your taxes in retirement is that you have to be able to delete your mental hard drive as soon as possible. You see, most of us over our lifetime, especially when it comes to financial matters, we have been brainwashed, and we have been giving so much bad information from the media out there in the marketplace, and many a times, sadly enough, by financial advisors. And the reason why many financial advisors are giving clients bad information is not necessarily that they intended to do that. I would argue that the vast majority of financial advisors in the marketplace are trying to do the very best that they can in order to mitigate issues and concerns on behalf of their clients. The challenge is, where is it that they're getting their information? Where is it that they're getting their education from? So if you go work for a brokerage firm, obviously they're going to teach you about brokerage. And when they teach you about brokerage, and they're going to try to teach you about the products that are the most suitable to the brokerage firm that they want you to go out in the marketplace and market on behalf of that brokerage firms and find clients that may be suitable for that particular product or service that you're marketing. What if you're working for an insurance company? Well, the same thing happens on the other side of the ledger. If you work for an insurance company and they specialize in variable products or investment products, obviously they're going to educate you along those lines, and they're going to teach you how to talk against everything else that you, as a financial advisor, would not want to compete against. So obviously, yourself is a self-defeating purpose. Now, what if you happen to work for an insurance company that is not in the variable business, is in the fixed business? So obviously they're going to be educating their advisors on how to sell against all the variable and all the brokerage firms and the competitors out in the marketplace, and bring to the forefront the critical aspects of their fixed products on behalf of their clients. Obviously, so the vast majority of Americans have been impacted one way or the other by one or many of these advisors in their lifetime. So you have to be able to take things with a grain of salt. Now, when you're a retirement strategist, when you're a tax planner, like this is what we do in our firm, we look at every financial decision through a telescope as opposed to a microscope. We in our firm, we're not married to any one company. We're not married to any one product. We're actually married to each and every one of every one of you, and every one of you, and every one of our clients that may want to come to us because they want to start thinking outside of the box from a business perspective. So again, if you want to be successful in retirement, just remember that when you go from accumulation to distribution, you need to make a paradigm shift. Because it is no longer about the accumulation rate, it is all about the distribution rate. And unless you do proper tax planning, you're never going to know, and you're never going to be able to accomplish optimum and maximum benefits for you and your family. Point number 4, what to consider. What are the things that you must consider when it comes to your retirement distribution planning? Number 1, I would say, do you want to be a prey or do you want to be the predator? You see, you're either at the table or you're on the menu. And when it comes to your retirement distribution planning, always remember that the vast majority of Americans are prey. And the vast majority of Americans are prey to the types of products that they invested in retirements, like the 401ks and IRAs, which the vast majority of Americans are putting a lot of money in. Not necessarily that the products are bad, but obviously having all of your eggs in one basket is definitely not apropos from a business perspective when it comes to retirement distribution planning, because if the vast majority of your assets happen to be in either the taxable bucket or the tax deferred bucket, then you are the prey. And the IRS is the predator. See, the IRS is going to determine how much they're going to tax you from one year to the next. So if you have $1 million portfolio, you really never know what percentage of that portfolio actually belongs to you. Because what belongs to the IRS will always belong to the IRS. Yes, you've been making pre-tax contributions to those plans for many, many years. But when you make pre-tax contributions, you actually take a deduction for those contributions. But by the same token, yes, you're postponing the taxes, but you're also postponing the tax liabilities. So depending on how the IRS feels, or the U.S. government feels, or how politicians will feel in the future, they will determine what percentage of those hard-earned dollars that you've set aside in retirement they're going to want for themselves. And you're not going to have any control over that. So in reality, you are the prey and definitely not the predator. So by doing proper tax planning and taking control of your tax liabilities, your tax timing, and taking full control of your distribution, then you start to make that paradigm shift of not being a prey, but being the predator. Now you're the predator. Now you're the one with the control. Now that you are the one who's going to dictate who's going to get what and when, and at the lowest possible tax enforcement as you can possibly get from that perspective. Point number 5, I think, is a very important one, and with this I'll close this podcast today. And point number 5, this is where you're going to have that commitment. You got to say to yourself, the sooner that I get going, the better life is going to be from a retirement standpoint. So you need a tax and retirement distribution coach. And this is what I do for a living. I am a retirement strategist. I am a tax planner, and I am a retirement distribution coach. So if you need someone that can take you from point A to point B and help you reduce your tax liability by, on the average, a minimum of 25% to 45%, where the average is somewhere around 38%. And if we have enough time, it may be a lot higher than that. Then I'm here to help you. So what you ought to do is you need to reach out to me. You can send me an email or give me a call and schedule a 30-minute either conference call or video conference with me, and at no cost or obligation. So you have nothing to lose, but at least I can assure you of one thing. By the time that we finish that conference call or that video conference, you're going to be in a much, much better position than they were before you engaged my services for those 30 minutes at no cost or obligation. One of the things that we try to do for our clients, and we do this for the vast majority of our clients, and obviously the closer and closer they get to retirement, the more we do it, is number one, to be able to put together and develop a tactical retirement blueprint. Because the tactical retirement blueprints that I use in my firm and that we use in our firm is one that is geared toward tax planning and retirement distribution planning. That's it. Nothing more, nothing less. Because at the end of the day, we're a specialty firm, and we are known for what we do best. So again, you need to hire a coach, and we're actually applying for the job. So hire us, to have that conversation with us. And again, 30 minutes is not going to kill you, and it's going to leave you a lot better than you were before we started that conversation. Because the tactical retirement blueprint is going to determine a number of things. So for instance, when you start thinking about your retirement and you're entering retirement, what are some of the things that you need to consider? Well, do I start taking Social Security right away? And do I take it first? Do I start to invade my non-qualified assets, my IRAs, my CDs, my savings, and those kind of things second? And then do we, wait for the IRAs and start invading those third? So in other words, you wanna wait till age 70 and a half to start taking those IRA distributions, because at that point in time, the government and the IRS is going to force you to do so. So do you take Social Security first, non-qualified assets seconds, or IRAs third? Or do you start with non-qualified assets first, and then Social Security second, and then last but not least, IRAs third? Or does it make sense for you to start invading your IRA assets first, and then your non-qualified assets, and then Social Security last? You see, none of you, and I can pretty much guarantee this, none of you have ever gone through this exercise. And if you're a year away from retirement, then you need to make certain you have this exercise right away. If you're 5 years away from retirement, then you need to do the same exercise, because then at least now you have 5 years of proper planning in order to make certain that you have the right amount of assets and the right arrangement between your taxable bucket, your tax-deferred bucket, and your tax-free bucket. What if you have 10 years away from retirement? Then obviously you're on top of the world, because all the other opportunities are going to be opening up to you and your family, in which you're going to be able to, in many a case, either reduce your tax liabilities completely or reduce them by anywhere between 55 and 75%. So how would you like to live in a world in which you would either not pay a single dollar federal income tax or state income tax, or most important, even if you are able to reduce those taxes by 55 to 65%? That would be an excellent world to live in. The challenge is that when you go and do your taxes with your CPA or your accountant, they're not going to be able to tell you that. For those of you that are self-reliant and you go and use TurboTax or some other tax software to do that, those tax softwares, they're not going to determine that for you. They're only going to determine whether you owe taxes, whether you broke even, or whether you're going to receive a tax refund. But unless you engage a company like ours in creating a tactical retirement blueprint, how else are you going to know? How else are you going to be able to figure out which one of those three options is going to be the most suitable for you, that is going to give you the higher income, the longer longevity planning, meaning that you're not going to run out of money before you run out of life, and if you're not able to create samples of those three distribution rates, and then you get to make a determination as to which one may be the most suitable for you, how are you ever going to know that? So again, I didn't want to take that much time from you, but I get very, very excited, when I talk about, creating a tax reduction plan for each and every one of you that is very viable. So is it possible? Indeed it is. Is it important? Absolutely, it is important to make certain that you can reduce your tax liabilities in retirement. What does it take? Again, it takes a lot of discipline, and it takes commitment, and it takes timing. What to consider? Well, we have already talked about you're either a prey or you're a predator. You're either at the table or you're on the menu. It's your decision. It's up to you. Nobody else is going to make that decision for you. And then obviously you're going to need a tax planning coach, and that's what we're applying for. So if you're interested in learning more about what we do, please give us a call. You can call me at 786-766-1042. Again, area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at GablesTaxGroup.com. And if you're asking in that email to get together with me, then I will reply to that email, and included will be a link that will take you directly to my calendar. And then you can schedule either a 20 or a 30-minute video conference or teleconference with me at no cost or obligation to you. And then we can discuss whatever it is and that you may want to talk about. What questions do you have that may be keeping you awake at night when it comes to your retirement distribution planning or your tax planning? And always remember, my number one goal is to kind of help each and every one of you kind of change the way that you see things, because when you change the way that you see things, the things that you see change. So again, thanks very much for giving me a few minutes of your time today. We'll talk again next week. Take care. Bye-bye.